and in today's tutorial, we'll be taking the course, continuation actually, of the course ACC101, and today will be the last class we have on the course. It's about the fourth volume of the course, so we should be concluding with the course today, and by next week we should be starting some other course. With this being said, let's get straight into it. Okay, so we have ACC 101, just like the thumbnail has it. All right, just like the thumbnail has it, we are taking bookkeeping. All right, book of prime entry, that's what we're taking. Okay, so in our last class, we talked about some certain terms. We talked about some certain terms, okay, about the resource document. We also emphases were laid on the credit transaction, emphasis were laid on the cash transaction, emphasis were laid on what is called value added tax, that's VAT, debit note, credit note. All right, all this we discussed in detail. All right, we also discussed the credit note. All right, and we made comparison between the credit and the debit notes. All right, so today we're going to be talking about the book of prime entry, but before then we're going to be talking about what it means by a cross check. All right, when we say a cross check, all right, maybe paid into anyone's bank account if the payee endorses, all right, the back of the check. All right, the cross check, all right, payment may be paid, the cross check may be paid into anyone's bank account as far as the payee endorses the back of the check. Just a quick one on the cross check. And we have the check. All right, it is the most common form of payment in business. All right, the check is the most common, all right, form of payment, the most common form of payment in business. Are we together? And analysis is made and reference is made on the cross check that can be paid as far as the endorser is, all right, the signature of the endorser is at the back of the check. Okay, so we have that as that. Now let's continue. Now we have something called the receipt. All right, the receipt requires the seller to give the buyer, all right, according to the law, the receipt requires the seller to give the buyer, all right, the law requires the seller to give the buyer a receipt for goods or services that have been paid for, all right, in cash. All right, cash doesn't mean literally liquid. All right, it could be by transfer, it could be by liquid, like it could be by literally cash. All right, it's just a sign that okay, this goods you have purchased is paid for. Then you get the receipt. All right, now the receipt. All right, we can refer to it as a document as proof of payment for purchased, all right, purchased goods. Okay, a proof of payment of purchased goods. So we have that as that. Now we have financial accounting provide useful information. All right, financial accounting provide useful information in the financial statement to users to enable them make economic decision. All right, that is financial accounting. That's a quick one on what financial accounting does. All right, financial accounting. All right, it provides useful information. All right, in the financial statement. All right, useful information in the financial statement, info in the financial, all right, financial statement or statements, financial statements to the users of financial statement. All right, the board of management, the shareholders, and all right, the use or those are the users of financial statement, in order to help them make decisions. All right, enable them make economic decision. All right, that is the purpose of financial accounting. So we have that as that. So we have the book of prime entry. All right, that's the main class for today, and as the thumbnail has it, it says, all right, the book of prime entry. So we are taking our bearing from. Now the very first book of prime entry we want to talk about is the sales day book. All right, and the sales day book is a book where goods sold on credit are recorded. All right, sales day book. All right, this is the book where goods sold on credit are recorded. Are recorded. All right, the sales day book is a book whereby goods sold on credit are recorded. All right, we also have the purchase day book. Okay, when we're talking about the purchase day book, what do we mean in essence? The purchase day book is used to record the purchase on credit of goods bought, especially for resale. All right, purchase, definitely if an organization is purchasing, all right, it should be concentrated on buying resources to invest into the business to keep it running, that production might continue, and producing is tantamount to sales. All right, if there's nothing to offer to customer, then we can talk of no sales. All right, now back to purchase day book. It's a book, all right, whereby it is used to record purchase on credit. All right, all right, it is used to record the purchase on credit. The purchase on credit, all right, of those goods, bought especially, all right, especially for resale. All right, for especially for resale. So we have that on the purchase day book. Okay, so we have the check, which is the most common form of payment in business, and we have the receipt, which is a document as a proof of payment. It's required by the law, all right, that when goods are being paid for in cash, all right, there should be a document of proof, which is the receipt. All right, and we have something called the term financial accounting. All right, and it's said to be, all right, it provides, all right, financial accounting provide useful information in the financial statements, all right, which is used to, all right, make economic decision by the users of the financial statement, all right. And we have here sales day book is the book, all right, whereby goods sold on credit are recorded. Are we together? And we have the purchase day book, which is the book whereby you record purchase on credit, especially goods bought for the purpose of resale. So we have that as that. So permit me to erase the board so we can take more questions. So we have the journal. Excuse me, let me take some more. Excuse me. So not this journal, but this journal. All right. Now, the journal is used to record a variety of things, most of which consist of accounting adjustments, such as correction of errors, all right, rather than transaction. All right. The journal is used to record varieties of things. All right, used to record varieties of things. All right, is used to record the varieties of things. All right, things, most of which consist of accounting adjustments. Adjustment. All right. For example, correction of error. All right. Adjustments and errors. And errors. All right. Now we have something called the cash book. All right. The cash book has main functions. All right, the cash book has two main functions. Cash book, two main functions. All right, and these functions, all right, the first function we have, it forms part of the book of prime entries and also part of the ledger. Part of the book of prime entries, all right, and part of the ledger. All right, when we say prime entry, we are talking about direct, all right, as the transaction is ongoing, all right, or as the transaction has just been concluded. It's at the first set of book you record the transaction or you do the recording. All right, then the second set is the ledger, then thereafter we have the trial balance, all right, and it goes on and so forth. All right, so we have that as that. So cash book is one of the, it has two functions, right, and the first function is that it forms part of the book of prime entry, and secondly part of the ledger. All right, so we have that as that. Now we also have something called a 2-column cash book. All right, 2 colon cash book. Okay, when we say 2 colon cash book, what are we talking about? 2 colon cash book. Okay. Now, the 2 colon cash book is one of which cash received and paid are recorded in one, all right, recorded on each side of the cash book. We have the check, received and paid recorded in other column of each side of the book. Now, let me explain this. 1 colon cash book, we have just cash, all right, cash entries, all right, credit and debit, all right. So we have particulars, we have details, we have date. Same thing here, all right. But the 2 colon cash book, on the 2 colon cash book, we have something called bank, all right. We have, here is just cash. Here we have date, we have particulars, and we have bank. All right, we have cash, we have bank, and the same thing here. All right, so in the single colon cash book, which is more of this one, all right, single colon cash book, we have nothing like bank, all right, but in the 2 colon cash book, there's a colon for bank, and the 3 colon cash book, we have what we call discount, all right, more of, yeah, discount, if I'm not mistaken. So that's what's the difference between 2, 3, and colon cash book. All right, we'll get to know more of that when we get to our 300 level. We'll begin to do the postings. All right. So now the 2 colon cash book is one in which cash received and paid are recorded in 1 colon on each side of the cash book. And so now you see that in hash there's accommodation for both cash and check. All right, but single colon cash book, there's only accommodation for cash, no accommodation for bank. All right, cash at bank, there's nothing like that on single colon cash book. Okay, so we have accommodate cash and check, which is bank. All right, as against single colon cash book. The single colon cash book. So we have that as that. Okay, now we have the 3 colon, like I just said, 3 colon. All right, cash. All right, cash book. Here there's accommodation for cash, bank, and discounts. All right, accommodation for cash, bank, and discounts. Are we together? So that's how that works. So we have that as that. So permit me to erase the board so we can continue. Now we have We are done with the single, double, and three column cash book. Now let's talk about the petty cash book. All right. The petty cash book is used instead of a cash ledger account in the general ledger. All right. That's the petty. All right. In the general ledger, the petty cash book is used. All right. The petty cash book is used instead of a cash ledger. Instead of a cash ledger in the general ledger. All right. Now there's something called the double entry system. All right. The double entry system in accounting, whereby every transaction has to be recorded. All right. All right. Gives two rise to two entries. All right. The double entry system. All right. For every debit entry, all right, the double entry system. For every debit entry, there must be a corresponding credit entry. All right. There must be a corresponding, all right, credit entry. The double entry system. So we have that as that. Now there's something called golden rule of double entry. All right. Now the money value of each transaction is entered one on each side of the general ledger in different accounts. Now we need to pay attention to this. The nominal account deals with expenses, income, and losses. All right. Nominal. All right. The nominal account does what? Anything that has to do with expenses, income, and profit and losses. All right. Deals with or deals in expenses, all right, profits, all right, income and losses. Income and losses. That's for the nominal account. And we have now, please note that in the nominal account, the account of expenses and losses are debited. Account of okay, I think I should switch the marker. Account of expenses and losses are debited. All right, in the nominal account, all right, of expenses and losses are debited, while account of income and gain are credited. All right, it's just a normal law. Account, when money goes out, you are debited. All right, when money goes out, you are debited, and when money comes in, you are credited. Income and gains are credited. Income and gains are credited. All right, so we have that as that. So now the trial balance is neither part of the general ledger nor it's a book of prime entry. All right, the trial balance is not a book of prime entry and is not part of the trial balance. Is not a book, all right, of prime entry, all right, and it's not what part of the general ledger. General, it's not part of general ledger. Okay, now the trial balance is a list of ledger. All right, the trial balance is a list of the balances of the general ledger. Are we together? The trial balance, all right, is a list of what? All right, it's a list of balances in the general ledger. All right, at the end of list of balances in the general ledger. All right, in the general ledger, all right, at the end of an accounting period. At the end of an accounting, all right, at the end of an accounting period. All right, so we have that as that, and basically it is what it is. And on this note, we are concluding. All right, on this note, we are concluding on ACC 101 for the semester. All right, basically this is the first stage of studying. All right, then after this we move to the discussion phase. All right, this is the familiarization stage of the studying. All right, then the next stage, after we are done with other courses as well, after we are done familiarizing ourselves with other courses, we move to the next stage on Telegram. All right, where we get to discuss what we have learned in the first phase of studying. All right, please, if you are here to submit your notes, do well to submit your notes and send it to the group. All right, this is one way I cross-check on your progress. And if you have any questions, all right, any questions on what we have been taking of the course ACC101, do well to channel the question to me and I will respond to the questions accordingly. All right, thank you very much, everyone. It's great to have you all on board, and I look forward to seeing you all in subsequent tutorial. Do have a wonderful afternoon. Bye.